we've got businesses to run and we've got clients that we need to advise, and we need to know what can we best do to control our healthcare costs for our employees in 2020. So let me share with you just 3 big things that a lot of business owners are doing next year. This is just not from me, but what I'm seeing all across the country. Number 1, everybody, and I mean everybody, is matching their healthcare plans with some type of pre-tax plan. The big 2 pre-tax plans out there are either flexible savings accounts or health savings accounts. Health savings accounts are way more popular than flexible savings accounts because HSAs are owned by the employees and the flexible savings accounts are owned by the company. So at the end of the year, if your company is offering a flex savings account, whatever has been contributed can't roll over, it comes back to the company. Whereas if you have an HSA, a health savings account, whatever has been contributed stays with the employee. Even if they leave your company, they still keep the funds. So it's like a 401k for your health care. And that is why it is much, much more popular among employees. When you're going out and recruiting people, when you're looking for it, particularly in this low unemployment environment, very, very important to make sure that you include some type of pre-tax plan for with your health insurance. I'm seeing companies all across the country making sure they do it. That's number 1. Secondly, to keep in mind, at the beginning of 2020, healthcare reimbursement accounts will become okay again. They used to be law, and then under the Affordable Care Act, they basically were not really allowed, and now they are allowed again as of January 1st. And what that means is, as an employer, you can set up an HRA, you can contribute money pre-tax so that your employees don't get taxed on it. They can take the money out, and they can use it for their healthcare expenses or to buy their own healthcare insurance on their own. It's really designed for employers that either don't have that great healthcare plans in place and are looking for some way to stay competitive, some benefit to offer that answers the healthcare question, or for those employers that are looking for just another option, another alternative that they can offer to their employees. Very inexpensive to set up and potentially very, very popular. So we'll see where that is on January 1st of 2020. So number one, every employer here I'm seeing across the country is putting some type of pre-tax plan in place. Number 2, there has been between a 30 to 40% increase in small employers who are offering some type of self-insured health plans. Now, if you talk to any Fortune 1000 company, 80 to 90% of their health care is usually self-insured in some way or form. But for small businesses, it's much tougher to do it. It takes a lot of administration, you need a lot of data, you need a lot of demographics to self-insure yourself. It is a risky thing to do, which is why over the past few years, a lot of benefit administrators have started to offer what's called level benefit or hybrid plans. It is a combination of self-insurance and group insurance. It is, to put it very simply, where employers pay the health costs of employees at a very low level, say the first few $100s, and then anything that incurs after that, a group plan then kicks in. Because they become popular for one big reason. If you just have a traditional group plan in your business, you are probably paying too much for your insurance because you're paying group premiums every month for some percentage of your employees that aren't using your insurance at all. They're healthier, they're not sick, they're younger, they're whatever, and yet you're still paying the insurance for them. So if you have that type of demographic in your company, self-insuring means that you can pay only when the people are using it up to a certain amount, but then when combined with the group insurance plan, it provides an overall protection for any large-scale type of health issues that your employees might have. This is why I've seen more than a 30% increase in benefit and hybrid plans. And for some of my clients and some of the people that I talk to around the country, they are saying that their businesses are saving anywhere from 12 to 15% of their healthcare costs with a level funded plan. Bear in mind, not all companies are good for this. It takes a lot of administration, it takes a lot of demographics, a lot of data to do it. It depends on the kind of company that you are, but it's certainly worth asking about and looking into. Finally, the big trend I'm seeing around the country is association health plans. They are more difficult to set up in Pennsylvania than in other states. But an association health plan works like this. You need to put together 100 employees in an association. It's basically a buying group. So you can get together with people in your industry, you can get together with people in your community or in your locality and form that buying group. And once you have more than 100 employees that are part of that buying group, you are not subject to the more onerous rules of the Affordable Care Act, which means you can pick and choose some of the benefits that the plan can offer to your employees. Now, some of your employees might not like that. They might like the lower premiums because there's less benefits, but maybe those benefits are important to them. Which gets me to my final point about these actions. Association health plans, skinny plans, healthcare reimbursement accounts that are part of the pre-tax benefit plans, you need to add them or consider them as an extra, as an option, in addition to what you're currently providing to your employees. And the reason why is that none of those things that I just mentioned are laws. Every one of them came about through executive orders from the Trump administration or orders from the Department of Labor. And just as quickly as President Trump overturned President Obama's executive orders, if Trump loses the election in November, his successor will just as quickly can overturn the orders that he has that's established association health plans, skinny plans, and healthcare reimbursement accounts because they're not law. So be careful. Consider them as an option to consider, but add them to your existing health benefits. Don't do them in lieu of your existing health benefits, just in case where things go in Washington and what happens in the election. Okay? Those are the three big trends.